Hi, let's talk about the finance, basic financial concepts, and I'll explain it. Number one, inflow equal to that is income, both are same. Second term, outflow or expense, again both are same. Then you have heard about assets, liability, the term inflation, savings, and investment. Now, what is inflow or income? Anything which we get, money in the form of money, in the form of gifts or somebody is giving, or salary, or you do any work and you're paid for it. So that's your income. Expense, anything it goes out of your pocket for your rental, for buying clothes or food, anything you're going out partying and things like that. So anything you're spending money, it's going out. It's called as the expense or outflow. Assets, put to simple term, assets is something you own and it has a value. Example, a home, if you have bought completely by down paying the amount and there is no loan on it. I repeat, a home is an asset when there is no loan on it. So completely yours, or it is of the bank. So what could be another one? A small, which has value when I'm just talking about assets. A car, over the period of time, you've paid everything and it's an asset for you. Later on, yes, depreciation is there, that's a different thing. You own it something, but there is no loan on it. So asset which has a value to it. Then liability. Again, as I gave you an example of a home. If you buy a home, taking a home loan, the loan is a liability. So that home is not an asset, it's a liability, and the owner is a bank. So that's a liability when you pay something. Example of a car. Again, if you bought a car and if you have to pay a loan, till the loan is not paid, you don't own the car. You are liable to pay the loan. So money, again, liability. Debts, anything personal, you have taken money from somebody and you have to give it to somebody back. Liability. Those are liability. Best example is credit cards. We just swipe the cards whenever we like it. It's easy, but we only remind why we spend it when we have to pay the bills. So that's all liability. So liability. Inflation. This term comes when you might have heard about somebody talking in TV on the stock markets, or anything related to the vegetable prices have gone up. So what does that mean is, every year approximately, anything you take, for example, if you take the rice or any vegetables what we used to buy, our parents should buy for, we have to pay extra now. So that is because of the inflation. So every year the value of our money, it's decreasing. For example, right now if somebody is 1 kg of rice is logged, let's say 50 rupees. What is it after 1 year? It could be 56 rupees or 70 rupees, 10 rupees. So inflation. So every year, as per Government of India, the average everybody takes is a 6% inflation. 6%. So today, if the rice is 50 rupees, then 100 rupees, then it is 106 rupees next year. So inflation, increase in the value every year. And savings. Now, the savings definition is whatever comes in, we have kept it, and we have to pay somebody, we are liable to that. The expenses, liability, expenses, everything which you're supposed to give it, both minus the income, minus the expenses, and what is left with us is the savings. Unfortunately, it should have been something different, but as of now, the savings is what is remaining. We will work on it. have a solution for that. Bachta hi nahi kuch, we will work on it. Final is the investment. This is where we have to invest. Where can we invest from? Our savings only. We need to do that. Okay. Thank you and have a nice day.